The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
S&P is off 3, the Dow's off 50, Nasdaq's off 22, the Russell's off 2. And we've been up a little bit, we've been down a little bit. I think we're just waiting for earnings after the bell. We'll go through those for the next couple of days to get you all caught up. For the rest of it, just not much in the way of volume today, just 3.2 billion shares. Friday came in at 6.5 billion shares, so volume really didn't increase to the downside, and certainly we are lower today without a lot of volume. This has been one of these, well, I'm going to call it through last week. Didn't have a lot of volume up, had a little less volume down, and that was kind of the trend. Probably going to continue that today. Google, I believe after the bell, right? Yeah, Alphabet. And that's kind of what everybody's a little nervous about. Really, the problem is what they say going forward. And that is, how bad will European their new laws that take effect? Is it the 1st of May? Certainly within the next 30 days. I'll have to go back and look at it. The new European laws from the right to be forgotten and a handful of other things affect Google. And that's kind of it. We're going to... Nothing probably really changed. YouTube's more popular than ever. YouTube has some problems that are starting to show. In fact, on this day in 2005, the first YouTube video was uploaded by one of the co-founders. I don't know what happened to him. I haven't ever heard of the guy again. He posted this goofy video of going to the zoo. I mean, it would have gotten one view, maybe his mother, today. So it wasn't much of anything, but it was the first YouTube video up on the site. And of course, I think what they sell out for, $3 billion, something. It's a pretty good chunk of change. So what else do we have going on in the market today? Well, that's kind of it. It's all hurry up and wait for earnings all through this week. We'll go through those. What else do we have? Got the Red Baron. Okay. Anything else going on? I think that's about it. Let's get into some history, and we'll start talking about what's going to happen this week.
And it's all just a little bit of history repeating.
And on this day, we find out what it means to be or not to be, or even Eric the half-a-bee.
Half a bee, philosophically, must ipso facto half not be. But half the bee has got to be vis-a-vis its entity. You see? But can a bee be said to be or not to be an entire bee when half the bee is not a bee due to some ancient injury? Singing.
Eric the half-a-bee. 1972, I think even before they were famous in England for Monty Python. On this day, we have an interesting thing that happened. In 1564, William Shakespeare is born, Stratford-on-Avon. They didn't have birth certificates at the time, But basically, you were baptized 3 days after, so probably 98% chance that he was born on this day. He died 52 years later on the same date and had retired to Stratford upon Avon, if you've ever been there, which I went through with my boss, who lived through the Blitz. He was an interesting guy. His name was John. And man, he talked like he had a box of rocks always in his mouth. It was awfully a hard time to actually ever figure out what he was saying. But he was hysterical. And liked to get drunk and sing little ditties from the pub, which I thought was always interesting. By 1596, the company had performed classic Shakespeare plays, Romeo and Juliet, Richard II, and A Midsummer Night's Dream. Beginning in the 17th century, saw the performances of his great tragedies, Hamlet, the next decade. Shakespeare produced such masterpieces as Othello, King Lear, Macbeth, and The Tempest. He retired 3 years before his death. That was it. Interesting guy. Married at 18, married a 26-year-old who he lived with, who also outlived him yet another 8 years. So a pretty hardy stock. But when I was looking at this, my first thought was, and it has been kind of wild to make sure that I keep up with statistics. What are the odds that someone dies on the same date that they were born on? And I'll give you a little hint that there's a game of chance you play that you actually use your hand for to figure the odds. And we'll see if anybody comes up with the den with what the odds are. If you live over 1 year old, let's put it that way, you got to live to at least 1 year old. What are the odds that you die on the same date that you're born? The reason I wanted to bring this up is that we talk about technical trading, but man, have I ever run into people that are less statistically literate than in the trading business. And I'm not exactly sure why. But I think it's because they tend to be very observational and not much into the way of testing things. Some people do. I have to say that it took me 6 years before I really got into statistics and in trading. And one of the reasons was I read a book from Nassim Taleb. Nope. That's what you would think. You would think it was the square of 356, but it's not. Anyway, Nassim Taleb put this one paragraph in early in his book, and it changed my life forever. Statistics and applied probabilistic knowledge is the core of knowledge. Statistics is what tells you if something is true, false, or merely anecdotal. It is the logic of science. Nassim Taleb from Fooled by Randomness. We'll be back. I'll tell you what the odds are, someone dying on the same date that they were born on, figuring that they at least make it through the first year of their life. And we'll be back. And we'll talk about tea and how that has to do with statistics. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, the reason I bring this up just a little bit is because I was spending a lot of the time this weekend going back through some of my stuff and having someone else look at it to see statistically if I'd made any errors, because it's fairly easy to do with statistics. It's also fairly easy to imbibe biases in it. So I had somebody that's a professor of statistics take a look at my stuff over the weekend, and I went back through some other stuff. I'm going to get into a little bit of statistics, and we're going to get into some charts. But my tease in the first segment was if you live to be 1 year old, what are the odds that you die on the same day that you were born? And my clue in the den was dice. If you throw a dice, a die, as it's called for a single die, what is the odds of hitting 1, 2, 3, or 4, or 5, or 6? It's always 1 in 6. Doesn't matter how many times you throw it, it's 1 in 6. That's about the exact same in human life. Now, there's some slight biases. That is, if you try to kill yourself on Christmas or New Year's, actually New Year's, has a statistical anomaly, but not much, not more than you would think. And of course, that's it. 1 in 365 and a quarter if you throw in the leap year. And interestingly enough, the offset of the northern and southern hemisphere offset them. So more people die of pneumonia in the wintertime, of course, in the north hemisphere, but even fewer in the southern hemisphere. So really, if you wanted to get into the weeds, you could get fairly deep into this. But for the most part, the odds are 1 in 365, just like you were born. And a lot of times you get in there and you kind of think, well, it's the square of 365 times the square of 365. It isn't. It is just, again, another throw of the dice. And I wanted to talk a little bit about how statistics actually developed. But the really modern day version of statistics started when a bunch of scientists, one called Ron Fisher, wanted to disprove a lady in England who said she could tell the difference between tea that had the milk added first and the milk added last. She had a big business of going to Royals, I think this is the story, and being able to test the best teas in the world. So she had a little bit of skin in the game. So they wanted to put it to her. Can you actually tell the difference between milk? And you know what? This is like in the 20s or 30s, and no one really thought about how to make a good study. This is long before white papers and statistics really did. It's just getting going. In fact, the basis of a lot of statistics didn't even start till 1900, and actually putting scientific rigor in it didn't happen. So what they figured out was that they would do over and over again tests where they added the milk before and the milk after. And, well, guess what? She was 8 for 8 for the first test, 8 and 8 for the second test. So the odds are that 1 in 70 that she could, if she could actually do what she said she did, she had a 1 in 70 chance of actually doing it. Twice was the square. So the more you repeat these things, the less chance there is that she could kind of figure it out. So apparently there is something to it. But this was the real kind of root of statistical testing, and that is how to come up with a test when it's very hard to figure out why, what, and how to do it. This is called the null hypothesis, where you can't prove something is true, but for the most part, you can probably prove that it's false. And while you can never prove that she knows she could do this in just random luck, the chances of a random luck are slim. But anyway, on a quiet day here in the stock market, an interesting day to take a look at it. If you would like to learn more about statistics, there is a great course that on YouTube, and I will be glad to email you the link to that course. It's called a Crash Course on Statistics, but it might get you thinking a little bit more mathematically to the stock market and a little less, maybe a little less superstition, and the at least the thought process that if you make a proposition, that you better be able, or at least to the extent you can, come up with a way that you could actually test something to be true. Anyway, interesting book, The Lady Tasting Tea, and that's from David Salzberg. And it started, at least that test started a lot of what we do now. Statistics is a double-edged sword. It's easily misused and used today in the press a great deal for evil, but we're using it only for good, to make money in the stock market. Just a way of thinking of it. You can give me a call at 877-927-6648. West of the Rockies. East of the Rockies, it's still the same number, 877-927-6648. North of the border in Canada, 877-927-6648. I'm still reliving a few of Art Bell's episodes, so if you're wondering where that came from. Okay, what else do we have? Okay. Coast to Coast AM. Yep. There's also, if you're a fan of him, there's a guy named Hendry who has a show that does a wonderful imitation of his shows, and he's been doing it all week since Art Bell passed away. But the Phil Henry Show You can go back. I think they're all publicly available and listen to his shows around 2000 where he just made ridiculous amounts of fun of Art Bell. Okay, so I've had my fun for today. Played Eric the Half a Bee. We gave you a little taste of statistical knowledge. And I think that's about it. Let's get to some charts and have fun for the rest of the day as we continue to start waiting for earnings. After the bell tonight, as we said, we've got Google, which is now known as Alphabet. I always love until they confuse the bejesus out of everybody. TD Ameritrade, also Whirlpool, Barrick Gold. So we'll see a little bit about that. Gold already hurting today on King Dollar, who teased a lot of people, lower prices, and then kind of kicked everybody in their teeth with a huge move up and into it. Still think that we get a test of 92 before we see a break lower, but we will see. Tomorrow morning, we start off with Caterpillar, Lockheed Martin, Verizon, Freeport-McMoRan, Harley-Davidson, United Technologies, Corning, Biogen, Pulte Group, JetBlue, SAP, Sherwin-Williams, Eli Lilly, Polaris, I can't even say it, Polaris, I can't say it, Texas Instruments, Amgen, Win, Super Value. Wow.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And the S&P's now down about 8. Didn't react too badly, but I guess there's a terrorist attack in Toronto. At least that's what I'm seeing kind of come across the wire. And, I started going up there in 1991 or 92 and through 2000, went up there every 2 weeks for business meetings. And very interesting to see how they weren't very welcoming to anybody into the country that was coming there on business. But you know what? They were very welcoming with the rest of the world. They wanted lots of people coming into the country, but God forbid that you would actually take somebody's job there. I never really understood the whole part of that. They wanted people, but didn't want people. And I guess, no, I won't get into it. But I got the 3rd degree, and so did my business partner. We flew up from Cincinnati about every 2 weeks, and for a day or so. But what can you say? We'll see how this is going on. I don't think we're off about 108 points. So a little bit of nervousness going into these earnings, as we said. Now, tomorrow morning after Polaris, we've got Texas Instruments, Amgen, Win Resources, Capital One, iRobot, Cree, Illumina, Six Flags, Teradyne, Hawaiian Holdings, and man, that gets us into Wednesday morning. Those other ones are yesterday afternoon. Did I say that right? Probably not. Texas Instruments tomorrow night, Amgen, Win, all those are after the bell tomorrow night. Then we get into Wednesday morning, which is Boeing, Twitter, ST Microelectronics, Comcast, General Dynamics, Anthem, Northrop Grumman, Rockwell Automation, Thermo Scientific, Boston Scientific, Owens Corning, Fiberglass, Hess Corporation, Travago, Norfolk Southern, the train people, Yandex, the Russian, Russian, what'd you call it? Internet company, I guess is the best way to describe it. Dr. Pepper, Snapple Group, A.O. Smith, which has been a good proxy for the housing business. It kind of turned down and showed weakness ahead of the higher interest rates. Tupperware, what else do we have? Silicon Laboratories. Man, we got a ton of them. And then after the bell on Wednesday night, we've got Facebook. Facebook, yeah. Nautilus, is that Nautilus? No. Facebook, Advanced Micro Devices, PayPal, Visa, AT&T, Align Technologies, Qualcomm, eBay, Chipotle, Las Vegas Sands, Ultra Clean Holdings, Xilinx, Range Resources, F5 Networks. I mean, we've got pretty much a Super Bowl going on this week with earnings. That's why everybody's a little bit nervous out here. Also, O'Reilly Automotive, Gold Corp. So a few more gold stocks. I know a lot of people trading gold out there. Avalon Bay Communities, New Gold. Thursday morning, we get into Domino's Pizza, United Parcel, MGM, General Motors, PepsiCo, American Airlines Group, Southwest Airlines. So enough of the airlines this week that's probably going to make a pretty big difference. Nokia, Raytheon, Bristol-Myers Squibb, Altria Group. On those airlines, remember that about 80% of the money they spend is on fuel. And, of course, the question that we never really know is how well that they were hedged for the possibility of higher fuel costs. And, of course, eventually you can't hedge out of them if they've been higher for a while. Royal Caribbean on Thursday morning, ConocoPhillips, Ally, Lending Tree, D.H. Horton. So we're going to get a little taste of housing. Microsoft, of course, on Thursday afternoon, along with Amazon on Thursday afternoon. Baidu, United States Steel, Western Digital, Starbucks, First Solar, Expedia. Okay, what else do we have? Eldorado Gold, Digital Realty Trust, one that I've been watching for the Silicon Valley. Ethan Allen Interiors, also one kind of hit by lower home sales. Anglo Eagle Mines, New Skin, Mohawk Industry, of course, another one based on housing. Those ones are probably going to be the week. Now, Friday morning, we get into Exxon, Chevron. So a lot of energy coming on Friday, Phillips 66, Colgate, Palmolive, Dover Corporation, Cabot, Charter Communications, Honda, Moody's, Phillips 66, Simon Properties. Of course, those guys could get hit by a lot of mall closings. Unclear exactly how bad that's going to be. Gaslog Partners, GLOP, which as long as you're going to continue to have low natural gas prices, some of these guys that are doing the liquefied natural gas could be doing well. Piper Jaffray's also on Friday morning. We're going to go to Omar. How you doing today, Omar?
I'm good. How are you?
Another day in paradise.
Oh yeah, it's definitely very up and down though. Up and down, that's for sure. My question is, I got into direction funds about a year ago, and I started off with the semiconductor because I'm really optimistic about the Internet of Things, and back then there was the whole Bitcoin thing going on, although I'm not much of a Bitcoin fan.
Yep.
I traded it back in the day, and I made a little bit of money, and then of course the mini crash happened.
Yep.
And I did not sell. I held at where I was at 168, and recently, with the Taiwan earnings and expectation of lower expectations with the earnings and all that. My question is, should I pull out now or should I buy more and try to dollar cost average my price?
You're at 168?
Yes.
Okay.
Well, I was, I'm at 168.
What was your original plan to stop out?
Well, I was hoping for another higher high.
Yeah, I know, but if you were wrong, where were you going to stop out and say, I can't take the pain anymore?
I'm really long-term on this, so my strategy was to just simply dollar cost average it out till it goes back up.
So at the moment, you don't have a full position?
I have a part position. I pulled out some of it, but I have about 20 shares in it. 20 shares, yeah, about 20 shares in it.
Okay. Here is the first thing I do. Whether you're investing or you're trading, there should be a stop. And you should do it and start to think about it when you start the trade, not long after it, because far too many people do it. Now, here's my fundamental call on semiconductors. And this goes into Apple. I looked at a lot of articles over the weekend. I've been talking about it in my Tech Insider for a while. We're moving to 5G. That means that over the next year, can you hold on through the break?
Yeah, of course.
Okay. Over the next year, we're going to make that, start to make that transition. So what happens, well, we talked about it a bit last week for a company, but what happens when you're doing transition? You generally quit selling the stuff that you have now, and everybody starts waiting for the stuff that you're going to sell later. We'll talk when we come back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Still have Omar on in Canada. Are you there?
Yes, I'm here.
Where are you at in Canada?
I'm in Hamilton, Ontario.
Okay. Well, yeah, Hamilton. Okay. It's been a long time since I was there, but I went for every 2 weeks for like 10 years. But our office was in Markham.
Oh, yeah.
So I'd drive from the airport to Markham, check in, go through meetings, go home the next night. So I went down and saw the Space Needle, but that was about it. Not the Space Needle, but the tower. But
Oh, the CN Tower?
yeah.
Oh, nice,
Two-
nice.
Yeah, we were in the video business and television business, so they knew everybody down there at the tower. But interesting. Okay, so here's the first thing. Whether you're an investor or whether you're a trader, the first thing you got to do is put a stop in. And whether it's a mental stop to at least start scaling out of it, you got to know what you're going to be wrong. Now, here's the problem with these leveraged shares, and that is that you're going to have some decay in the price no matter what. You know that, right?
Yeah, I understand the decay, especially in the volatile corrections in volatile markets. I understand that.
Right. The way that they get 3x on these is they're in the futures market.
Yeah.
And all you need this thing to do to go lower is the stocks go sideways. So you're in a problem. Now, my fundamental call is that everybody's getting ready for 5G phones. My guess is it's going to start somewhere around this fall to the first couple of months of next year. But I was talking about Osborne Computers last week, I think maybe Wednesday or so. They announced a new computer about 9 months before it was ready. And, of course, no one wanted to buy the computer they had, and they went bankrupt. And this is the problem that you have when everybody in the world knows that there's going to be new stuff coming. And the biggest part of electronics today is mostly cell phones and actually smartphones. So you got this time here where everybody's getting ready to make orders, but they're not buying any of the old stuff. And so the semi business is kind of probably going to be fairly tough through the rest of at least into September. So The problem you have is this thing could just go sideways and you'd still lose your shirt in the socks just because it's a leveraged product. And that would be my fear. What you need to do right now is figure out when you would sell the rest of your shares no matter what. And could you get some bounces and maybe get out of this? I think you could. But this semis are probably going to be one of the weakest parts of technology through the end of the summer, I would think.
And would I be able to, you think, dollar cost average my price, my initial capital? Like if I add more and get out on a bounce?
I'm not a fan of adding to a losing position.
Okay.
If you've got more money, then look for somewhere else where the sector is better performing. Does that make sense? Putting your eggs in the same, more eggs in the same basket. If you were wrong to begin with, just means generally you're more wrong. Does that make sense?
Hello?
Are you still there?
Yeah, I think there's a disruption in the connection.
Okay.
Yeah, so I would say about 110, would you say it's a fair exit?
Well, actually, this thing can fall apart if it gets below 117.31. Your next stop is $84.
Oh.
So what you got to do is figure out that you don't, at 102, there's a gap there that might be a little bit of support at 102, but at 102 you end up back down to $84, and that's why I don't add to a losing position.
Okay.
I would say make sure that you're in something else, and probably something fairly far away from the semiconductors, so that if all of technology gets pulled down by these, you don't get hit by it. They're a very small amount of stocks that won't be dragged down probably by these, maybe more software-oriented stuff, right, instead of hardware. So you want to be kind of far away from this sector. I would put more money in something else that you find that you like. There's nothing wrong with diversification. In an individual stock or an ETF, I never want to see more than 15 or 20% of the money I have in a single one of them. And I don't know if you have more than 20% of your investing capital in this thing.
About 18%. Well, it goes down every day, right?
Yeah, well, yeah.
Because I'm not buying more.
Yeah, okay. Just don't double up in a bad position is one of the first rules you have to learn. I know I'm going to be, no matter how good it looks, I'm going to be wrong a certain amount of the time. And it's the best way to take that part out of it is just to put in stops. Have you ever read Trading in the Zone? Is that a yes?
No, I haven't read it, but my fear over here is that I have put stops in the past about 5 to 10%, but due to its the very nature of its volatility, sometimes the stop gets hit and the price bounces back from the support just below it.
Yeah,
sometimes.
The way I do all the stops in my newsletter is if it closes below a certain level, then all I have to do is look at, at 358 each day with a couple minutes left and see, is this thing going to close below my stop, and then I can get out of it. Because I understand the part now with robotics and high-frequency traders. You put an order in, they're probably going to get it. They'll run the market of anybody that puts orders in today. So you just kind of have to say, I'm going to, every day at 3:58 with 2 minutes or 5 minutes left, I'm going to look at it, and if this drops below my stop, I'll go ahead and sell it. But it's one of those things where if it goes below it at noon, closes back above it, you can stay in the stock. So you can put your stops in just saying, hey, I will sell it if it goes below this level. I'll see how it trades during the day. I'll take the risk of one day, but I don't want it to go below this price and close below this price, because if it does, it's more likely to go even lower, right? So you can do stops that aren't physically in. And generally, the problem is that if you do put in a stop, I know that they'll just go and run it for 5 minutes and take you out, and then the stock pops right back up. But if it can't, if they can close the stock, if they can't close the stock lower, that's a pretty good sign. So wait till the end of the day, get some stops at least mentally in your head, and figure out how you can get out and get somewhere else. Don't throw more money after bad money. We'll be back after this.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I've got a couple things. First question was box. Do I see anything in this? It went and spiked the high of the gap. This is on a rather questionable story about how much these guys can make in artificial intelligence. Again, if you're in box, you're betting that they get bought out. None of the stuff that they do can scale to the level of Google, Amazon, Microsoft. These guys are way ahead of box. So the story today is bogus, but it may have run enough of these shorts out. I don't, if you're in the stock, you're betting on one thing, and that is that they get bought out. You're not betting that AI actually makes them any more money. I haven't seen anything from them that would say that. One last question is on Intel. My call that I thought that all the stories about them and their chips being flawed was rather bogus. And why I thought that. I think I answered somewhat at the time, but I will try to get back to it. The news and the way it came out was highly engineered. When that story broke, there were websites dedicated to the propaganda value of Intel's chips being flawed. This stuff takes time. You don't come up with websites and everything else in 6 hours and logos for each one of the flaws. This was a very carefully planned propaganda game. And I think right at the time I downloaded some of the examples of the flaws. And the idea is, at least for these flaws to work, and the reason you haven't heard any of them was because they just take too much time. There are far, far easier ways of getting information without you having to wait possibly weeks or months for this flaw to actually come out. In the meantime, sell when you can, not when you have to. See you here tomorrow. Same bat channel, same bat time.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.